Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everybody, we're going to be looking at a whole lot of things in this video, not just Canadian MJ. We have to zoom out as it is a global market and that is now coming into play. We're going to be looking at black backgrounds for this video, and let me know if you like them or not. In the cryptocurrency world, everybody favored the black as they could see it a lot easier, they say, so feel free to share whether you like it or not. And we're going to be reviewing what the difference was. A week ago we put out, a video in the trade game plan and it went perfectly and everybody loved us. And we did the same thing in terms of the same play. The setup was very, very similar, and it didn't work out today in terms of the bottom being found and a solid bounce playing out and already getting, the messages with swears in them and all that, which is fine. It comes with the territory. But if you're going to be a trader, you better be ready to be wrong often if you're trading often. And I trade dozens of times a week, and I am wrong a handful of times every single week. And it's being able to, number one, limit the losses and keep your risk to reward ratio in your favor and risk management in your favor to allow you to continue doing this. Number two, you got to learn from your mistakes, review what went wrong, which is what I'm doing in this video, and what outside factors came into play. And then number three, obviously letting the winners ride to outweigh your losers and obviously being right more than you are wrong, so that in the long run, when you're looking years and years, it adds up and it certainly is in your favor profitably. So what the difference was, the setup in the charts was extremely similar last week to this week. The RSI levels were in very similar places. The dump was ongoing. We were looking for a short-term bounce to cool off RSI levels. And let's look at the difference. So I've been pointing out correlations in these videos very often. The S&P 500 is now coming into play significantly. So this is the 5-minute chart right now for the S&P 500 on the day that the bounce worked out last Friday. It worked perfectly. Look at the S&P 500. It was a beautiful uptrend. It was one of the stronger days that we've seen recently, and we closed at the all-time high. This is the all-time high, and it's only pulled back since then. So we literally had the ideal day in the markets for that bounce to play out. Now today, we have the global markets pulling back, not just Canada, not just the US. Here's the North American markets. The Dow is down 2.5 points. When you see a 1% down day, that's a big red day in these markets. And to see 2%, 2.5%, that is a very significant down day and something that we really haven't seen in almost 14 months since the election. So the Dow was crushed. We had the S&P 500 down over 2%. Brazil, Canada, they're all down. We look at the European markets. European markets are all down 1.5%. So global markets are pulling back. That is definitely a factor that we need to keep in mind and watch correlations. And speaking of correlations, let's look at SPY on the 5-minute time frame here just compared to WEED. I did this in a recent video, but just to do it again, this is the 5-minute time frame today. Look at how similar these names are in terms of how they are linked. The top of the bounce was hit at the exact same time. This is the S&P 500. This is WEED. Then we pulled back, saw a little bounce. It's just almost tick for tick on this 5-minute time frame. They're doing the same thing. This tells me the correlations are strong, and that's not surprising because when the bears show up and volatility shows up and we see some fear and panic, that's when correlations are their strongest. And literally every single sector, every single stock, and even here just different, different regions, Canada and the US, they link up very significantly. So here on the 5-minute time frame, SPY weakness exactly mimicking with what WEED and the Canadian MJ sector was doing today. So it is absolutely my opinion that had the S&P 500, saw some pullback and then bounced significantly to a new high of the day, that the Canadian MJ market would have recovered today. But obviously that was not the case. So being able to react to these things as they are happening is certainly important. And when we woke up this morning and saw the S&P 500 weak today, I was certainly well aware that that would be a factor, but certainly couldn't anticipate that we would see a 2% dump kind of day. So where we stand from here, we now have to be concerned with the overall market, the S&P 500. So let's look at where we stand on the daily time frame. because it's been one big bull trend, very similar to the euphoria that we saw in Canadian MJ. The US markets have been in a state of euphoria since the election for about 14 months. You can see, literally zooming back, we're looking at the last year right now, and this is the most significant pullback, and it's also coming from the strongest bull break. So we're going from all-time high to fear very quickly, just like the Canadian MJ market, all-time high to fear very quickly. So we closed at the low of the day, which tells me we're likely to see some further downside next week. That shows us bear momentum is heading to the downside. This pullback is not done just yet, but in terms of changing the trend on the US market, it's not happening anytime soon. This is the weekly chart. The last weekly consolidation was down in the 266s. Here we are at 275, and today we dropped $10, and we would need to see another $10 drop even to encounter our first support level and our last higher low on the daily time frame. So we are absolutely in a pullback. We are oversold on the hourly time frame for the S&P 500. So if we drop first thing Monday morning, we will be looking for some short-term bounces at least. But we need to be aware that we could see extreme pullbacks in the Canadian MJ market if the extreme pullback in the S&P 500 continues. And in terms of this kind of pullback, we are going to see a bounce, and it's going to set a lower high. The question is going to be, at what point do we bounce? And that's the same exact thing we're looking for in the Canadian MJ sector. So let's get into some of these names in the Canadian MJ sector, and then I'm going to go over into some strategy with hedging and a way to protect yourself if you have some heavy positions in a certain sector. And hedging is essentially betting against yourself so that if, the trade is going against you and things are pulling back, you're still making money in a different avenue. And I'll point that out. We're going to be talking about options a little bit. And if you're not familiar with options, we have a 40-minute video for free on the YouTube channel. It's under the trading lessons. It's the most watched video that we've ever made. And I highly suggest checking that out if you're not familiar with options. So let's look at MJX to start. MJX has lost its daily uptrend. It's in all-out dump mode. Again, it's part of the U.S. market, so it is certainly subject to that and seeing weakness. And we're back to the levels where we were at when the first day of trading began with this new ETF and their new holdings, I should say, when they switched over to Canadian MJ. So we are looking down at the lowest price. $30 was the lowest price that we hit once we made that switch. And today we dropped down to $30.05. So we'll see if the bulls can defend $30. If they cannot, we're going to be looking down. Really, I would call that all-time lows, just because it's going to be the all-time lows since these holdings switched. So again, we're looking at hourly RSI levels. Hourly RSI is still oversold. We have a tight hourly range, and I would not be surprised to see market makers with a weaker open on Monday. It will depend to a certain degree what the S&P 500 is doing, and we're not going to stay tick for tick the entire time with the S&P 500. It will be a general correlation that's pretty strong, but there will be times when it varies. There'll be, a 30-minute period where they're not locked together, and it's not, always set in stone. It's just something to definitely be aware of. So looking at the 4-hour time frame for MJX, we're oversold. We are anticipating a bounce. That we're pretty much in free fall mode right now with the size of the dump that we're seeing. And the last time we saw a dump significant like this, we saw a very solid bounce. So I do expect another very solid bounce once the low is hit. The question is going to be, where is the low going to be hit? And I'm going to talk about, my positions and what I've done. And I am sitting in the red in a handful of my positions right now, but I'm honestly not really stressing about much. The only thing that I would be concerned about is if global markets start to see very significant dumps. And obviously we saw a significant dump today, but this would have to be, a multiple day or potentially a week-long event for me to start to get concerned with where Canadian MJ is right now and the speed at which we've dropped down to these levels. Think about the psychology of what's gone on. If 10 days ago, let's look at WEED, and then we'll go to the weekly in just a moment, but 10 days ago puts us right about here. If 10 days ago I said, we're about to drop 38% in 10 days, and you're going to be able to buy WEED in the $24 range, everybody would be pumped. And of course, we've been all cash because we've been very cautious of this, knowing that we were in a euphoric state. I have been trading euphoric markets for the last 4 or 5 years, USMJ, Canadian MJ, crypto, and on the way up, I kept saying, I was leaving money on the table and I was protecting myself, knowing that once the top was in, it was going to get ugly really fast because that's how it always goes once euphoria runs out. But if I were to say, that 10 days ago, you could buy WED at $24, everybody would be pumped for that. And here we are at $24, and suddenly everybody is panicking. And it's just such a shift in momentum of emotions in psychology, and that's what makes markets up. That's what markets are all about. But it's just so interesting that literally 10 days ago, if I told you this would happen, everybody that had cash ready to go would be pumped. And now here we are, and everybody's, a bit cautious to get in. And it definitely warrants some caution to get in because of the overall market situation. But in the grand scheme of things, because of the speed that we have pulled back, 35, 38%, or just here in the past 4 or 5 days, we've pulled back about 30 couple percent. So again, we are going to see a temporary bottom soon. I do expect that market makers could absolutely push the price down to some lower lows on Monday. But when the bounce does take place, we should very easily make our way back into the mid to upper $20 range and set a lower high, absolutely stay in a lower high downtrend, but certainly cool off these RSI levels on the shorter term time frames and see that lower high form. Look at the weekly time frame for WEED. We're pulling back down towards our base of last support. Anything above 1662 on WEED will be a higher low on the weekly time frame, keeping the uptrend in favor for the bulls. RSI levels on the daily and the weekly have cooled off substantially. On the daily, they were up in the 80s when we were at the all-time high, and here we are getting fairly close to oversold. If we were to drop down into the $22 range, we would be right at oversold on the daily chart. The weekly chart, RSI, was extremely overbought, up around 90, and here we are now back in the 50s. So everything is cooling off. We're resetting those emotions. We are no longer in euphoria. It took about a week to go from euphoria to fear. We are now in fear, and we are going to see market makers push the price down, get the maximum amount of selling that they can. We're going to see shorts begin to cover once they see the market, the overall stock market, begin to bounce, the SP 500, and we're going to be looking for signs of that to be a temporary bottom and give us a short-term bounce. So where I stand, I am red in positions. I started to enter partial positions yesterday, and I entered more significantly. I entered about 2/3 more today than I entered yesterday. And I also sold some of those positions that I entered today for either very small profit or break even to give myself cash to play if we see further downside again on Monday. Because again, we have to think about the psychology. Nothing has changed with these companies in this space. The only thing that's changed is perception of the market, and the market is made up of individuals. So we are still looking at legalization in the summer. We're still looking at, doors opening, and we haven't seen any earnings reports with this substantial increase in, everything that we've been speculating about. None of that has happened yet. So we're still looking. This is now the area where I'm reaching out to friends who have asked me about this space and saying, okay, now it's getting to be a good time to buy. You want to buy when everybody is most fearful. That is when, especially when nothing's changed. If we had news right now that said, Canada's not sure that we're going to legalize this year, that would be a different scenario. But there is no new news in this sector aside from APH, and it's, separating itself from the US. That's a different story. But in terms of the sector, there's no new news. This is just market weakness combined with euphoria and a little temporary bubble popping. So again, this is when we look to buy. And whether the game plan from when you're looking to buy, if you are looking to buy today or potentially Monday, the game plan is either one, you're looking for short-term gains and you're going to lock it in, or number two, you're setting your stop losses to break even if, once the bounce starts playing out and you get in the green, and you can potentially try and hold them for long-term positions. Who knows? Maybe this pullback that we're seeing right now and over the next couple of days where we hit our low is going to be the lowest price that we see in 2018. I'm not going to make that call. That's too bold a statement, but it's entirely possible under the right conditions. If the market were to recover and head back to all-time highs in the S&P 500 later in February, it is possible that that would be the case. So we're resetting everything, and we are looking for a temporary bottom to be set, just like we did today. Same thing is going to be for Monday. We're going to be looking for the market makers to open it weaker. We're going to be looking for a push down in the morning. But this time, we're going to be focused a lot more on the S&P 500. Is the market starting to bounce? And if so, the MJ sector will go with it. So where we stand on WEED, as I said, we got support 23.29, the low of today. If that breaks, I'm looking down at the next daily support of 20.36. We filled a gap on the daily time frame today at 23.78. There are some other gaps on this daily chart. Not all gaps have to fill. I can remember Netflix back years ago I don't even remember what price it was, maybe in the 40s. There's a gap back there that never filled, and I was keeping an eye on it, and the price just kept running, and it never pulled back to that price. So most gaps do fill, but not all gaps have to fill. So they're good to have as targets, but we can't assume that they're going to fill. So we're going to be looking for psychological levels as well, 23, 22, and it would only be a big red flag for me if that 1662 level broke. That would ruin the weekly long-term bullish uptrend. Anything above that level is a higher low, and at this point we would have to drop another 30% from where we stand, which would be a 60% drop in 2 weeks or whatever if we were going to get down to that level anytime soon, which I do not foresee happening unless the overall stock market collapses, which again is not likely. So where we stand on APH, weekly chart pulling back, lack of support established on the way up. It's very hard to find a support level. All we can look at here is the low of every week. There are supports on the daily time frame in between, but as far as the weekly chart goes, anything above 631 is a higher low. That is not going to break anytime soon. The daily chart, in terms of key support, I'm looking down at the next level of 1287, and there is a big gap at 1174. We could be heading down towards that level, but again, I would expect to see a bounce on the way, or a bounce before those levels were hit. So we need to see a bounce and a lower high set to cool off these shorter term time frames. Again, the 4-hour RSI on ACB is the lowest it's been since the summer dumps. And even before then, it's only been here one time. Look at the 4-hour RSI. Right now I'm going back to 2015. The 4-hour RSI has been in the 20s 2 times. This is the 3rd time in the history of APH. So again, we're looking for a short-term oversold bounce. We will set a lower high on the bounce because of how significantly we have dumped. And if the bulls are going to change the trend from there, it has to be a lower high, a higher low, and a higher high on the 4-hour time frame. That's looking a little bit too far in advance. Let's just look for our bottom step number 1, and we're going to be looking for that on Monday yet again, but it depends on the overall market. Let's look at ACB. ACB on the daily time frame. This is the weekly chart. We broke weekly support of 890, and we're now looking down at the next support of 691. So the daily chart, next daily support is down at that 691 level. So an all-out dump, very significant pullback, high bear volume. The daily charts are approaching oversold levels on these names. The 4-hour RSI, again, we scroll back, very similar. We have dipped into the 20s just twice. And here we are there a 3rd time in the history of ACB trading here. So we're looking for an oversold bounce, and we're going to be patient, and we're going to be protective. And again, let's talk about protection. Let's go to MJN quickly, and then we'll talk about protection and how you can hedge things. But obviously you need to be well versed in options if you're going to try and play them. Do not just try and play options. I promise you will lose money. It takes studying. It is a whole different animal than trading stocks. So MJN losing the weekly high or low, looking at the next daily support. And the next daily support, I'm looking down at 510. So 510 for MJN. At this point, from the high to the low, MJN has given back the most as it got overinflated, and in large part due to the large percent holdings in MJX for MJN. So the ETF had a large holding, it drove the price up, and now we pulled back more significantly than most names. So let's look now at what I'm talking about with options and hedging. And you can also hedge by going short. If I'm in with heavy positions in the Canadian MJ sector, I can short MJX. And what that means is if I see the price of Canadian MJ go up, the majority of my holdings are making money, and a small position in shorts would be losing, that's fine. Or if the Canadian MJ market pulls back, my small position in the shorts is going to be gaining money while the market is pulling back. I like options for hedging, and the reason for that is because of the leverage you can get in terms of, a little bit of money going a long way. So this is Fidelity. This is the Active Trader Pro platform and what I trade stocks on and what I stare at far too often. But let's look at what I'm talking about here on hedging. So this right here is the puts, the SPY 279 puts. And what that means is you are betting that the price is going to be below 279 on SPY when these options expire. And these are weekly options, meaning they expired today. These are the highest risk, highest reward, most volatile because they expire today. So let's look at a scenario, and I'm going to be switching back and forth between charts. Let's say first thing this morning, I bought in $100,000 into Canadian MJ right at the open. Now, obviously, that would not have been a good idea. As we know, we need to wait at least 15 minutes, wait for things to settle down. And today it took about an hour and a half before the bottom was found. But let's just say we did that. $100,000 right at the open. And because we had gap downs, that would mean if you bought $100,000 right at the open, you're probably down at this point about 10%. Let's just call it 10% for ease of numbers. It might be about 11 or 12%, but we'll say 10%. So you're now down $10,000. Your $100,000 is $90,000. At the same time, let's say that you were sitting there and saying, oh man, we're not hitting a bottom in Canadian MJ. We're continuing to pull back. And I'm noticing that the correlation is there with SPY and the S&P 500. I want to protect myself and say, okay, if SPY is going to keep going down, I want to have some puts that are going to make money if SPY keeps going down. If it doesn't go down, my puts will lose, but it's going to be a small position. And if it does go down, I'll make some money even though my other major holdings are losing. So I would put, let's say $5,000. I've got $100,000 in Canadian MJ. I put $5,000 in these puts, and I don't even enter at the start of the day. That would be too much foresight and a bit of guessing that would have obviously lucked out. But let's be more realistic and say we have our low of the day, the high of the bounce attempt, and then weakness. And I say, okay, if we hit a new low of the day, I'm going to enter SPY puts and just protect my trade. So that new low of the day occurred right here on SPY at about noon. So let's look at these puts and see what the price was at noon for buying. And let's say I bought $5,000 worth of puts at noon. That price was 102. So I'm now in at 102, and I'm going to ride these out for the rest of the day because I want to protect myself. So the market continues to pull back, and these puts do nothing but climb. And here we are at the end of the day at 336. And it hit the high at 336, and after hours it even hit a little bit higher. But let's just say 336 is the high, and let's be a little realistic as well. Let's say we take profit at $3. So that would make me break even on the day. Let's just go through that math. $100,000, I'm down $10,000 on Canadian MJ. I put $5,000 in these puts. They go up 200%. I just made $10,000. So again, that shows you the power of options in terms of leveraging capital and allowing you to make significant profits as well as significant losses. Had SPY bounced and saw strength after hitting a new low of the day, we would have likely seen Canadian MJ bounce. My Canadian MJ losses would not be as significant, but I would have lost some money in these puts. Probably by the time I closed them out, maybe lost $2,000, $2,500 or so. So this is obviously a scenario where the S&P 500 pulled back very significantly, but it just goes to show you that with $5,000 of protection, you could have protected $100,000 worth of capital in the Canadian MJ sector. And of course, there's other ways, shorting MJX, you're not going to see the same kind of profit percentages by doing that, but you would limit losses. So I know it seems counterintuitive to bet against yourself, but it is a way to protect yourself when you are going fairly heavy in one direction in case things do not go out the way that you are planning. So where we stand right now, I am in the red in in my Canadian MJ positions. I can't remember the last time I ever took a loss in Canadian MJ, so it is certainly a new feeling, but I'm not worried about these positions, and I shifted into longer term perspective. So had we seen a bounce today, I would have locked in some profit and called it a day. But because we are not seeing this kind of pullback, and I know that this market is going to bounce sooner rather than later, I'm perfectly fine holding on and looking for this bounce to play out next week. I will add to my positions and average down my cost basis on Monday, anticipating that we are going to see some lower open Monday morning. And from there, I will look to average down that cost basis and allow myself, essentially all we need to see for this trade to be back in the green or break even is get back to near the high of today. And that is up on WEED at 26.75. And I am very confident that we are going to see that price in WEED at some point in the near future in February. So that's where we stand. Again, just sharing my game plans. I'm not telling anybody to do anything. And I highly encourage you to go out there and educate yourself with the world of options, open yourself up to the possibility of hedging. And it just opens up so much more strategy with what you can do rather than just, buying and selling in one direction bullish. You can play bearish and make money on the way down by shorting MJX. You can play options. There's just so many different ways and so many different strategies to utilize once you open yourself up to the knowledge in terms of, different instruments to trade in this market. So hopefully not anybody, got in with more than they can afford to lose. If I end up taking a loss on this Canadian MJ play, obviously I would rather not do that, but I'll have no problem doing that just because over the last year, it's been nothing but green and nothing but gains. So definitely would only take away from some previous profit and not going to go in the hole and end up on the street. So hope that was informative. Let me know on the background whether black's good or gray is good. And let's see what the S&P 500 does heading into next week, as we are looking for a bit more further downside, at least to start next week. Hope you have a good rest of your weekend, and we will see you soon.